Hello traders, what's going on? This is Prof from Bencov FOREX Academy speaking. I want to welcome you to the channel. If you are new to this channel, make sure you subscribe to the channel by hitting that red subscribe button below. Also turn your notifications on so that you don't miss any of the content that we'll be uploading on this channel. So today I'm going to talk about support and resistance. I'm going to talk about the secrets to true support and resistance. If you are a price action trader, or if you intend to be successful in your trading career, then you cannot run away from the understanding of support and resistance. You don't only need to understand support and resistance, but you need to have a deeper and extended understanding of these concepts of support and resistance, and what is true support and resistance, and when should you use it, and when does it hold. You need to understand those things, because most of these strategies are framed around support and resistance. These are old concepts. They've been tried and tested over time, and they work. So you would want to align your setups and your trading strategy according to these old tried and tested concepts, so that you improve and enhance your success. If you check most of these strategies that are there, that are prevailing, they just change the words from support of support and resistance to something else. It might be liquidity, it might be supply and demand and all those, but it's just support and resistance. And you need to understand how to use this support and resistance and how to take advantage of those concepts. We're also going to talk about trend and trend reversal and riding the trend. So if you are taking your trades, you would want to make sure that those trades hold or give you the highest profit possible from the move. You don't want to enter in a trade, then you realize later that, oh, I should have stayed in this trade. Well, it then extended to so much pips. Well, you need to be able to ride with the trend. You need to have tools that shows you where the market is going, where the price is being delivered to. Then you ride along with that trend. You need to have skills to then identify where is it most possibly going to reverse, so that you are not afraid to hold on to your positions as the trade is running. So after we discuss these concepts of trend and trend reversal, in riding the trend, support and resistance, I'm going to give you entry points and entry structures and setups that you can take advantage of, that you can use to trade these concepts, that you can add to even your entry setups that you are already trading if you are a successful trader already, to then aid you to have an extra arsenal in your pocket to use to gain more of these entries and enjoy big moves that pay. So let's go into charts and then talk about trend and trend reversal. What is a trend, and how do you identify these trend reversals? This is the initial point. It's a displacement that price is going to do, and when price is displacing, it's going to be making a series of lower highs, lower highs, lower highs. As it make lower highs on this side, it's also going to be making lower lows. So it's a situation where price is just making this series of lower highs and lower lows. And when it's making a series of lower highs and lower lows, we say the price is in a downtrend. The opposite also is equally true, where we are simply saying that when you are going to the upside now, it's where price is making a series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, up until you get the point there that I've marked a point of reversal, where the price would then go down to even take out the previous higher low point that had been set as an anchor point for price to keep on going to the upside. So there are various ways of you identifying where the trend is going, from the higher time frames to the lower time frames. And how do you then identify trend? Well, we have three ways of doing this. The first way to identify where trend is going is to make use of our moving averages. Let's just check out here. I have GBP USD, and the moving averages that I have here is the EMA 200 and EMA 50. So this gray dark looking line average is the EMA 200, then this one is EMA 50. So these two moving averages are very useful when you want to determine where trend is going. So how do we make use of these two moving averages to determine where trend is going? Whenever price is below EMA 200, we are saying you are in a downtrend, and whenever price is above EMA 200, you are in an uptrend. So what happens is, as you know, indicators use price information of the previous candlesticks to then plot these lines. So because it's going to be using historic data, they tend to lag. They are slow in reacting, in showing you where trend is going. Up to this situation, we can see that we have a series of, this is a higher point from this point, so this is a higher point from this point. So already trend is reversed and is going in a different direction. But this moving average 200 has not yet shown that trend has changed and is moving in a different direction. But because EMA 50 uses lesser candles than EMA 200, this uses 200, this uses 50, so it tends to be close to the price. So it quickly shows you where price when trend is reversed. And if you are solely using this moving average, then whenever price comes above EMA 50 and starts moving above EMA 50 like this, retracing to EMA 50 going up, we are saying you are in a what? In an uptrend. And when you are below EMA 50 and price is coming back to retest EMA 50, we are saying you're in a what? You are in a what? In a downtrend. So most people would be using these EMAs as their indicators for trend. They take advantage of what is called the golden cross. What is the golden cross? The golden cross is simply the crossing of EMA 50 and EMA 200 like this. When this golden cross has happened, normally price tends to stay below these two moving averages for a long time. So most of them use this golden cross for swing trades. You can see this is daily time frame, mind you. So you can see that even on this situation here, where we have a cross of EMA 50 and EMA 200, price has stayed below this EMA moving averages for a long time. This is probably more than a month if you count the candlesticks that are just here. It's more than 2 months or a month if you count them well there. When price comes with the upside again and you have this golden cross, we expect the price to be staying above these two moving averages for quite some time, which is also the case here. When you have this golden cross again, we expect price to be staying below that moving average for a long time. So this is one way that you can identify where the trend is going. This is one of the easiest ways of identifying where the trend is going. You can also check out here. Price is just there is a golden cross here, and the price is staying above the two moving averages for a very long time. And after this golden cross, it is reasonable again to expect the same thing, that the price is going to be respecting these two moving averages as it goes to the downside. We wait to see how price is going to be reacting. This is GU. We wait to see how price is going to be respecting this moving averages as we go along. So this is just one way of identifying where the trend is going. So the second way of identifying where the trend is going is to make use of this indicator, the Bill Williams Fractal Indicator. So this indicator simply shows you these little shapes, shows you where the trend is now going. If it's moving to the upside, it shows you that it's now moving to the upside. If it's moving to the downside, it shows you that it's now moving to the downside. It's simply they will be simply marking the swing points on the chart to then show you where the trend is going. That's another way of determining how the trend is going. I don't like indicators that much, and I prefer my charts to be clean. So the third way of identifying where the trend is going is to make use of trend lines. By just using your trend lines, you can also see where the market is going, whether the trend has changed or the trend is continuing. You can just use your trend lines to then see whether you are in an uptrend or you are in a downtrend. So here I'm going to draw a trend line here on the internal structure here. I'm going to start my trend line from here up to this point. So for you to draw a trend line, you just need two connecting points. Come to this side here, you see that by just placing a line like that, I also have a trend there showing me that price is respecting this trend line going to the downside. We'll talk about support and resistance and the true support and resistance very soon, also making use of these trend lines, and you see how these trend lines can be helpful also in identifying the trend. So here is a trick when you are using your trend lines to identify where the trend is going. Remember, I said you can make use of 2 points to draw your trend line. Let's say you have drawn your trend line here. Okay, you have drawn your trend line here. Here we don't have a problem because price keeps on coming back to the trend line and retesting. Here it came back to the trend line and retested upwards. It came back to the trend line and retested upwards. It came back to the trend line and retested upward. So in this situation, we don't have a problem. Let me just remove these elements here so that the chart is clean and you are able to see the points that we are driving. All right. So I'm simply saying that there you don't have a problem about the trend or determine where the trend is going. The problem comes when price now breaks the trend line, and how then do you know whether we have reversed the trend or we are still in the same trend direction, or you just need to evolve your trend line? Because this trend line, remember, they need 2 points. So you can there is a possibility of you evolving this trend line from that point to this point, or even from the mark area point, the first point here that I've just indicated there, to that point. There is that possibility of evolving, or there is that confusion among those beginners of where to exactly to put your trend line when price is moving and you don't know where to put your trend line. Well, here is the trick. You need to take note of price action. Pay attention to price action. If you're going to be using these trend lines as your way of then seeing where price is going or where the trend is going, you need to pay attention to how price has broken the trend. So here, if you just give price time, because what you would want is price to retest the trend line there, if it's going to be continuing to the downside. So what you need to do is, if we are only looking at the trend itself, you need to check how price has broken the trend line. The price can break the trend line in 2 ways. You need to write that down. The price can break the trend line in 2 ways. The first way that price can break the trend line is in an impulse way. So if price breaks the trend line there in a violent impulse way, then we might be reasonably expecting a change of trend. And in that situation, we would want to wait to see what happens after that impulse. Is that impulse going to break areas of support and resistance, and also break market structure points, so that we have a shift in market structure to the other side? How is the price action being delivered on that particular time frame that you'll be looking at? So that's number one. Price can break in a violent, impulsive way. In that situation, we are saying there is a break in trend. Like for example, here we have a case in point. Let's use this case in point here. We had this trend line here, and how did price broke here? It broke in a violent way, in an impulsive manner, isn't it? This is an impulse. It's different from how price has been delivered here. Here price has been delivered sideways. So the second way of breaking the trend line is in a corrective manner. So if price breaks the trend line in a corrective way, then you need to evolve your trend line, because there is no progression in the market in that particular case. Here there is no progression. Price has just been moving to the sideways. So in this situation now, you cannot then go on to then say, well, this is a break in trend line and you want to take your trades downside. This will not hold. You just be emotionally be affected there, because these trades will always be taking you in and out, and you'll be losing money. Even if you try to take a structure there into the downside, this is just a correction. This is an impulse from nowhere. We are in a range. It's not a different impulse from this way. You have an impulse, then a correction here you can take to the downside. This is impulse from nowhere. We are in a correction. So you cannot then go on and take this point to say, well, we are having impulse correction. Nature theory says impulse correction is the movement of the market. You need to look at the bigger picture. Where are we coming from? Where are we in the price chart? Where are we? Or how is price being delivered? So we are simply saying in this situation now, because the price broke the trend line in a corrective manner, then you need to evolve your trend line. Just wait a bit while once price has been delivered, and then you identify, if it's correcting like this, you identify the structures that are being delivered by that price. You then identify the structures that are being delivered by that price. As we break away from those structures, as we then break away from those structures, as we break away from those structures, then you would want to evolve your trend line and extend it. You would then want to evolve your trend line to this point, then you extend it into the future to see where price might also come and retest that particular trend line. All right, so those are the three ways of identifying the trend and where the trend is going. Those are the three ways. You can make use of moving averages. It's a simple way of doing it. You can make use of your Fractal indicator. You can make use of these trend lines. I prefer making use of these trend lines because they help me keep my charts clean. So now we have talked about trend lines. We want to talk about trend reversals. So what is trend reversals? If we have talked about the trend, what is trend reversal, and what are we talking about when we're talking about riding the trend? So trend reversal, I had marked this point as a reversal point. Trend reversal happens when we are breaking, remember the trend we're having, in this case we're having, this was a lower high and this was this was a higher high compared to this, a higher high and a higher high, and then on the lower side we had a higher low going to the upside. So trend reversal happens when now we are breaking those series of the lows that we are being given as we are going to the upside. For example, here trend reversals, this is the trend as we go. When this is now moving counter this trend, we are saying we are now having what? A trend reversal. So when we are talking about riding the trend and making the most profit out of that trend, we want to talk about a technique. I want to give you a technique which you can use based on support and resistance, which you can use to take advantage of these trades. Then you'll be adding on these trades. Let's say, for example, you have taken a trade from this point. After this retracement, you add onto your positions. Then you keep on holding those positions up until you can enjoy the whole move here. How do you do that? How do we best ride this trend so that we have the most profit out of it? Even here, as you come back to this area, how do you take advantage of this trade so that when we retrace again to this area of that has been broken here, we talk about support and resistance, I don't want to spoil it, you then also take another trade to the upside. When price retraces, you take another trade so that you keep on riding with the trend. Remember, the trend is your best friend, so you want to make sure that you are riding along with this trend. So this then brings us to the concept of support and resistance. It then brings us to the concept of support and resistance. What is support? What is resistance? What is support? What is resistance? Okay, when you're talking about support and resistance, textbook-wise, support resistance is where price reacts like this, then goes into the opposite direction. This can be viewed as an area of support. So a support can either be a previous high where the market would have created a memory of it retracing from that area. For example, here, as you approach this high here, because the market previously reacted and sold from this area, it is most likely that when you get to those points again, the market is also going to move away from that particular area. So we're simply saying that support and resistance are areas where the market is most likely to respect and retrace from. There are those areas where the market is most likely going to retrace from. There are areas where price would have created a memory to then react and retrace from that particular area. For example, here, as you approach this high here, you would expect that the price should retrace from that particular high. As you approach this high, we would expect that the price should at least react on those particular areas. As you approach this high again, we would expect that the price should react from that area. Just take note of how price is reacting as we approach those particular points. As you approach this high here, as it then retraced from that particular high going to downside. As they approached this high, they reacted from that high going to the downside, but it wasn't a sustained move. They quickly went back because we are still trending upwards. We are still going against the trend. So talking of support and resistance, the area of support is where price is found support to continue in the given direction. If we're going to the upside and the price is just broken this swing point here and come back to find support in that particular point, we are simply saying that area is an area of support. So what we are going to do today is we are not going to look at support and resistance as just specific price area, levels. Rather, we are going to look at support and resistance as zones. We are going to mark our support and resistance as zones rather than as specific price areas. So in other words, when the market is in a downtrend, let's just go to lower time frame here and illustrate exactly what we are talking about. So let's just look at this price action. Let me mark this price action so that you see what we are talking about. So this is a trend, isn't it? This is a trend. We are trending to the downside on this particular area here. So as price is coming down, it should, as long as it's going to maintain this trend, it should continue creating a series of these higher lows. This high is higher than this. This high is lower than this one. So here we would expect it to maintain and respect this trend line and continue going to the downside. As it reaches this point, we are expecting price to find support in this area and continue to go to the downside. So we have two types of supports that we're going to talk about here. We have two types of supports that we're going to talk about. We are going to talk about horizontal support zones, and we are also going to talk about trend lines as our support zones. We are going to talk about trend lines as our support zones, and we are also going to talk about horizontal lines as our areas of support. So when you look at these horizontal lines, that's where we are going to take them as zones rather than specific price areas. If we are then looking at these horizontal zones, we are going to take them as zones rather than they are specific price areas. But when we are looking at these trend lines, we are going to be taking these trend lines as is our support and resistance. If you're going to the downside like this, we expect price to respect this resistance and continue to push to the downside. When you break structure like this and you have this swing point being violated, then we are going to mark this specific area as our resistance broken, which then becomes our support. So broken resistance becomes support, and what we're going to be doing is we look to trade these trades with they come back to these support areas. That's how we are going to be trading these. So this is support areas. Let's just go to another pay and look at the same concept again. I'm now on gold, and we want to check this concept of support and resistance. So here, as you can see, price is trending to the downside using our trend lines. Price is trending to the downside and is going to the downside, and because the price has been going to the downside, it has created memory of respecting this line. So this trend line that I have here is a resistance line. It's a resistance line, and within this resistance line we are going to have zones, horizontal zones, where price would have created a memory of also where we also expect the price to be respecting as it goes. For example, here price was trending to the upside. If you check here, price was trending to the upside before this down move, and as it was trending to the upside here, as it was correcting, there was a zone, there was this zone here, okay, and there was this zone. This zone here is our area of resistance horizontal. This zone here is our area of support, and support broken becomes resistance. So this support has been broken, then it becomes resistance. This as price is going to be correcting again on this little correction that you see here. On this little correction that you see here, we are expecting and we are waiting. Let me just make sure that I don't lose these areas that we are indicating here. All right, as the price is going to the downside, as price is correcting rather, we are expecting this price to be coming back to retest the broken support, which is now resistance. And then as price goes down to break this support area like this, we expect price to come back to retest that support area broken, which has now become resistance. And at the down of this range, at the down of this correction down here, we also mark this as our area of support. It's possible that price will just come and then meander around here before it goes back to the upside. But in this case, it came and broke this support in a very momentous way. So in this case, we are simply saying that this broken support becomes again resistance. Then we identify another correction. This little correction here, this little correction here, the list goes on. We can do this the whole day. Even this one here, price created a memory here that it was willing to retrace from that point. Then when price comes back, we would expect price to go up or to break through this support area. And as it breaks through this support area, this becomes resistance. This happened up until we were in this region here. So our trend line now is helping us to identify a higher time frame trend. It is helping us to identify what is happening on the higher time frame. If we go to the daily time frame there, you see that gold was trending down here. Okay, you see that gold was trending down up to this point here. So it's helping us identify what higher time frame trend. And what we would expect is for the gold to keep on respecting this trend line, then it will go to the downside like that. But the moment, because we said this line now, this line is acting as our support, our resistance rather. So the moment resistance is broken, it becomes support. The moment resistance is broken, it becomes support. So as they break this trend line, what we would expect to is for them to come back and retest what this support. Because remember, resistance broken becomes support, support broken becomes resistance. So as they break this resistance line, we expect them to come back to retest that resistance broken, which would now be a support. But then there is a confluence here. We said we have this trend line as our what? As our resistance line. Then we also have the horizontal zones as our what? Our support and resistance again. So in this case here, we have this swing point which was supposed to send price to the downside, but it failed to send price to the downside, rather was traded through by this price action, which then gave this zone the opportunity to be what? To be support. So what we are expecting is for price to come back where? To come back in this region, to then give us a setup to continue to go to the downside, because this price area which used to be resistance no longer hold as a resistance, now is just a support, to support that the trend is now changing to the upside. So this is how you identify your trend reversals, using support and resistance. And we are going to frame setups based on this concept of trend and support and resistance, and be able to trade this trend reversal. This is an area of trend reversal. If you are trading market maker, they call it a peak formation, but this is an area of what? Of trend reversal. This again can be viewed again as an area of trend reversal if we go to lower time frames. Let's just look at the price action going up to that point before we go on to frame our setups, to give you setups that we can use when you are trading this strategy. So if you check here, from here you have structure, the structure that is a continuation structure to go to the upside. Then from the continuation structure we have now a series of what? Of higher highs, higher highs, higher highs as we go to the upside. And from every correction, above the correction there is resistance, below the correction there is support, and broken resistance becomes support. So as the price breaks this resistance zone, I'm expecting it to come back to retest this support. When it's in confluence with this other support on the other side, which is a trend line, that's a beautiful trade that we can consider. Not take but consider. Not take but consider. It's a beautiful trade that we can consider if everything is now aligning to the situation that we'll be having on the price action. I will give you everything that we will be looking for on that particular trade. This area you can extend it. Then on this correction again, we have this correction here. The top side is our what? Is our resistance. The downside is our support. Then this resistance broken becomes support, and we expect the price to come back and use this as its support to send to continue sending price going on the upside. Then this top side, if I can just extend this zone here, this top side is resistance before price trade through it. While price trade through it, it then becomes support, where would you expect price to then come and retest and send price to the upside. All right. So that's support and resistance for you. Now we want to go on and talk about the trade setups that we can use to enter into these trades, and also add positions so that we ride with the trend, and also trade reversals. So the first thing that I'm going to talk about is trading the trend reversal. I'm going to start with the trading the trend reversal. How do you trade a trend reversal? So how do we confirm that trend is reversed? We are going to use, let me just adjust my trend line there so that is looking nice. So the question is, how do you trade a trend reversal? How do you trade a trend reversal? The first thing is you need to look at your support and resistance and be sure that the trend is reversed. The first support and resistance that we are going to look at is your horizontal support and resistance, which is this region here. So what we know is, we know that this price section here, let's change the color to another color, maybe this one will do. What we know is this region here is supposed to act as support to send price to the upside, just like what happened here. This region here is supposed to act as support to send price to the upside. But when price trade through this support area and violates this swing point, the previous swing point, when price trades through this support area and violates this swing point, then in that case we are saying that it is highly probable that the trend has changed. Now, how should this price break? Remember, when we're talking about trend lines, we said if it's gonna break this support here, which is the trend line, it should break this in an impulsive and aggressive way, like what just happened here. It broke this line in an impulsive and aggressive way. Then after it breaks in an impulsive and aggressive way, not only the trend line but also this support which was supposed to hold for this price to go to the upside. Not only this support, the other third thing that has been violated is this lower point, which is now break in market structure. The structure of the market was going to the upside, but now it has been broken. This previous point has been broken, which is now break to the market structure. When these three conditions have been fulfilled, then you can safely trade your trend reversal in this way. You then wait for price to come back to the previous area of support, which is now resistance. You wait for price to come back in a corrective manner. Remember, price should come back correctively to the area of what? Of previous support, which is now resistance. When the price comes back to this area of support, you then look for your trade to go to the downside. How then do you look for your trade? Your entry setup, your entry point is going to be, number one, either you're going to use the order block in the support, in the now the resistance area, the order block in the support, or now the resistance area. In this case, it will be this order block that I'm marking here. Let me just mark the order block for you so that you see how you are going to be taking these trades based on true support and resistance. So that's strategy number one. You are going to make use of the order block that is in that particular resistance area, support area that was broken, that is now resistance, which is this area here. The order block that you are given there is the first thing that you would want to use. Let's remove few. Right. So the order block in that area is this order block. As price comes back correctively into that order block, then you would want to take your trade. That's number one. Number two, if price is going to come correctively, then remember what we talked about when we're doing structures. Market will always be displayed. Will always be displaying these structures that we talked about in another video where we're talking about multi-time frame and structures. So if you check here, you have your diagonal there as we go to the upside. You have your diagonal there as we go to the upside. We have this channel that is coming back to retest there. So remember, on the third touch of this channel, you would want to take your trade. On the third touch of this channel, you would want to take your risky trade if it aligns with, number one, the support or the resistance, support and resistance area. Number two, the order block. Number three, the channel itself. So this area already, because we talked about support and resistance, and you now know that when it's on top like this, it's acting as resistance. This is support. So as it approaches this previous area of support, you have confluence of how many things? Number one, the order block. Number two, the channel itself. Number three, the area of support. This trade will be a high probability trade that you can take to the downside. This is the best way to trade support and resistance in a profitable way. So what you know is now support broken becomes resistance, isn't it? Support broken becomes resistance. So this was support area. This was support area there. And where has it been broken? This is the point where that particular point has been broken. So support broken becomes resistance. So this again will be another trade to take going to the downside. This will be another trade to take going to the downside if you are going to be taking these trades based on this information alone. Right. So we have just talked about one way of taking these trades. Number two, let's talk about the second way that we can use to take these trades. So if we come back to this point here, we want to talk about a risky entry. If we come back to this point here, what you would want is, because you are now back in the area of previous support and resistance, because you are now back in the area of previous support and resistance, you don't want a situation where price would then come back in this area, then continue going to the upside. You don't want that. You would want to make sure that you take a trade that will play out well. So what you can do is, if you are afraid of taking the order block, if you are afraid of taking the rejection in that previous support and resistance, you can wait for the first impulse to happen. So what you're going to do is, you're going to wait for the first impulse to go down like this. After the first impulse, what you then do is, you go to lower time frames and look for a trade entry on this correction. So what you do is, you then go to lower time frames. You then go to lower time frames and look for trades in that lower time frame. You can see here that as you are on this lower time frame, there is price action that has been displayed here. there is price action that has been displayed here. On this correction is where now you then look to take your trades. You can even go up to 15 minutes lower time frames to then look for a trade in this particular setup. Look at that. Look at that. In this particular setup, you can then take this trade, either risk entry on this point or reduced risk entry as it breaks there. This is the best way to trade support and resistance. This doesn't only work on currencies, it also works on volatility indices. Let's just check out what V100 has been doing. Let's just check out what has been happening on V100 here. So if I just go to higher time frame here, you see that price has been trending to the downside here. Price has been trending to the downside, and this previous swing point should be an area of what? Of resistance. Price should not trade through this horizontal price that I have just highlighted, and also this trend line that is going to the downside should also be an area of resistance. Price should keep on going down, coming to the trend line and going down. When we see price willingness to break the trend line in an impulsive way like this, then we should smell what? A trend reversal, and we'll be looking forward to trade that trend reversal. How then do we want to trade this trade reversal? Number one, there is a break of this resistance that was holding price to continue going to the downside. Number two, there is number one, break of structure. This is break of structure. Not only that is break of structure, but also this was a swing point. So the moment we have price going above this swing point like this, we have break of market structure there. Market should be going in the opposite direction. And even if you want to use the whole region of price action given here as your structure, then you can indicate all this price region here to be your zone of horizontal support and resistance. Your zone of horizontal support and resistance. And what we'll be looking for is, as the price breaks to the upside like this, we look forward for price to come back into what? Into this region before it continues to the upside. Price should come back into this region to retest this horizontal support area, as well as probably to retest this area here. But you can see that this area already has been retested here. This retest, it wasn't enough to get to this, but there is an order block before the break of that particular structure, which has been used to then hold price to the upside. There is an order block there which led to break of structure that has been used to hold price to that area there. So even as you come here on the lowest time frame, this again is an area broken. This point was resistance, this point was support. So as this resistance is broken like this, it then becomes support. So this area here is an area of support. And what you would want to do is, you would want to make sure that you mark these areas. As price comes back to that area, you want to see how price is reacting. You want that price to come in a corrective manner. Price should correctively come back to that area so that you take the trade to the upside. Then if you look at this here, if I can have a trend line from this point going to the upside, you can see that this was a little correction here, and this little correction was supposed to hold price to go to the upside, but price failed to hit the higher high. This was the previous area of resistance. This support area was supposed to send price above this resistance area there, but what happened is price came into this failed to break that resistance area and continued to go to the lower side. Ladies and gentlemen, to be safe, never trade these kind of reversals. These kind of reversals are dangerous. Why? Because you don't know whether this is just a correction, whether this will keep on be a correction before we can send price to the upside. Just like what was happening here, see, this did not take out this previous high, so price has been moving down in a corrective way. You don't know whether this price is gonna be moving down like that before it can impulsively move to the upside. So don't trade these horizontal support areas where the price is not violated, the price is not, don't take this as a change in market structure where the price is not taken up the previous high. However, if price comes, then it takes away this high. Then after taking away that high, it then comes back to break this support area here. Then in that case, we can look forward for price to come back to retest that area. Then we can trade the trade going to the downside, because the market would have changed direction in that particular case. And also because we have a trend line here, as the price breaks the trend line now, we can disqualify now the fact that it did not go above this. Then we use this one as our support broken becomes resistance. In that particular case, I would want to see price correcting up until it touches this trend line. So in that particular case, I will not be respecting much this horizontal support, because this horizontal support was not broken in a way that I expect. I would be expecting this price to come back to this trend line before I can sell that price to the downside. So that's it for true support and resistance and the trend reversal. If you are adding on positions to ride along with the trend, what you can do is you can take advantage of these corrections that are being given as you go up with the trend. These corrections that are being given, when price comes back to your area of support, which is your trend line, you want to take advantage of these corrections and take an order block setup there, or a risk setup there, or a reduced risk setup, to then add your positions to the upside so that you can ride along with the trend. This is how you trade true support and resistance. So just a quick recap. Before I end this video. We have talked about true support and resistance and trend. So what you need to do is you need to identify where your trend is going, so that you can easily identify your areas of support and your areas of resistance. You need to identify where your trend is going, so that you can identify your areas of what? Of support and your areas of resistance. When you have marked your horizontal support and resistance, as well as your trend lines, using them as support and resistance, what you then need to do is you need to wait for price to come back to that area of support for you to take a buy trade, or come back to that area of resistance for you to take a sell trade. How do you take your sell trade? You can either make use of order blocks in confluence with the support and resistance zone, and you can make use of your reduced risk entry and your risk entries in confluence again with the support and resistance zone. You can also make use of structures that will be displayed as price is being delivered on your price chart. You can make use of those structures to then go on and then and take trades based on those structures. If you don't understand how to trade those structures, don't worry, there's a video on this channel again solely on structures. You can go and watch how you can best trade those structures. Thank you very much.